Hey, podcast world. Welcome to another episode of your favorite podcast and mine, FNO InsureTech.
This is your favorite podcast, Rob?
It's my favorite podcast. Yeah, I have to admit that. Yeah. How about
I
you,
enjoy it. I enjoy it. In
Lee?
fact,
Lee,
it
you're
actually
hedging.
it
You're
actually
hedging.
has 5 stars on iTunes.
It
podcast.
does. It does. And not because I'm the only person that's rated it over and over and over again.
No, so that
Truth be
means
told.
somebody else enjoys it.
Thank you out there for rating us, and we'd like you to continue to do that if you would. That gentleman is my co-host, Mr. Lee Boyd, who today is in Waco, Texas. Yes?
I am, and you're in Sacramento.
I am. Waco, Texas is the national headquarters of 470 Claims, where we work, and Lee is in our headquarters today, and I am in my home office in Sacramento, California.
You know, Waco is where Dr. Pepper was founded?
I do know that. You've mentioned on other podcasts. So does that mean we're running out of things to talk about?
No, it's just really a very important thing to know. I wanted to make sure everyone knew it.
It's not the first. It's also the home of Magnolia.
Yeah, but Dr. Pepper is pretty big.
I think that's a good question. Which brand is bigger, Magnolia or Dr. Pepper?
That is a good question. My wife would say Dr. Pepper, but I think the general public would say Magnolia.
Kyle
in
Davis
fact,
would say.
Yeah. You know, Magnolia actually has a very interesting thing going on this weekend. They have a silo marathon and half marathon race.
Will you be participating?
I will be. I'll be doing the half marathon. It's one of the best half marathons out there. I love this one. This would be the second year of it.
Wow. For those of you who don't know, my co-host here, Mr. Lee Boyd, is a marathoner, half marathoner, triathlete, all around healthy guy. And,
you've also walked on a treadmill before.
I have, 3 times, and but I try to stay away from it because I get sweaty every time, and that's not good.
It gets all sticky. I don't understand.
You got to shower afterwards. It's a lot of trouble. But none of that has to do with today's episode.
Nothing.
Although,
what is today's episode?
Today we have an alumni of Y Combinator, not our first alumni of Y Combinator. This is Mr. Cameron MacArthur, who is the CEO, I believe, and co-founder of AI Insurance.
Yeah, AI Insurance is a very interesting product. It's a claims management software company, and it's designed for smaller insurance companies. They really set out to do a one avenue to really start working with the data, and it's morphed into more than that. So I'm excited to hear about what all Cameron has to talk about, and what's on the roadmap.
Yeah, we met Cameron coincidentally, and we'll tell that story during the episode. But he's a terrific young man who's really smart and very dedicated to bringing a solution to a difficult problem for TPAs and insurers and other people in our space.
Yeah, very, very good stuff today.
So without further ado, and no more babble,
obviously,
here is our interview with Cameron MacArthur from AI Insurance. Hey there, everybody. Welcome to our interview with Cameron MacArthur from AI Insurance. How you doing, Cameron?
Doing great. Thank you guys so much for having me.
Glad you could be on today.
We're thrilled to have you with us. And before we get into it, I just want to say that you kind of were connected to us through my son, right?
Yes.
And how did that happen?
He and I both went through Y Combinator together, which is an accelerator program for software. Well, not actually exclusively software startups, but startups out of Silicon Valley.
But you guys have in common that you're both SaaS companies, yes?
Yes.
And so I want to just put a shout out to Alex Beller for setting this up, and we appreciate that. And so let's jump right in. let's talk about AI insurance. And we like to start by giving our guests the opportunity to do their elevator speech or take a couple of minutes and talk about your company.
Yeah, great. The nutshell is that we build claims management software, and it's modern cloud-based claims management software specifically directed at TPAs, claims management companies, and small captives and risk retention groups that manage their own claims. This is because we found that there was a huge part of this market that was really underserved. If you're if you're Nationwide or Geico, you can pay $1 million a month for Guidewire, but if you're a small captive or a small TPA or even a large TPA, $1 million a month isn't even in your stratosphere. And these old softwares, there are a bunch of claims management softwares out there, but because of their age, they're 25 years old, 35 years old. So they're actually built in a way that is just not very applicable to a bunch of different kinds of books of insurance. And the technology stack that they have is just candidly outdated with what's available in 2019.
Sure.
So we're all about bringing claims management to the cloud at a really affordable price and letting everybody involved in a claim see all the information associated with it and do their part, regardless of where they are in the world. And then the AI piece of our AI insurance comes into our long-term goals. Is we want to move the claims management behavior and process away from just saving PDFs into folders and into starting to actually track quantifiable data points. And when you
Cool.
start to do that as an organization, you can then learn from those data points, apply artificial intelligence and machine learning, and start to unlock some really cool predictive analytic capabilities.
Cool. We'll talk about data some more a little bit later, but I want to just dig into your history a little bit. For those of you who haven't met Cameron, Cameron is, it's fair to say, a young man. And you don't hear a lot of young men who are in their 20s talking about building claim management systems, unless maybe they grew up in something that's relevant to that. But that's not really the case with you, right? So my question is how do you get from uh, I think you're from the Northeast, correct? How do you get from there to where you are today? How did that happen?
Yeah, it's a good question and one that I get a lot. Like, hey, Cameron, you're 25. Why are you building insurance software? And I think for me, it's really that I've always been a problem solver, and I sort of stumbled into this space. I was working as a cognitive software engineer at IBM in Boston. There's a lot of healthcare up there and health insurance, and as a result of the large hospital systems, a lot of medical malpractice insurance. So I got exposure to the space through a friend and basically was blown away at how much information was moving through this insurance market. And even, at that point, I was just looking at MedMal, which is less than 0.5% of insurance, and just how underutilized the data was. And, I started digging, seeing if I could be a little bit more effective with this data. And I think if you're someone who likes solving problems, it's hard not to get excited about the insurance space. Not to knock on the insurance
No,
space.
no.
Every industry has
Sure.
issues, but we're talking about a $5 trillion market that really hasn't changed too much since the first insurance company was opened like 352 years ago.
Okay, so go on. So you I mean, you basically graduated high school 15 minutes ago. Um, no, but
Yeah, so I
seriously,
can
so
I can give a
you're a
deeper
young man.
dive.
You're working at IBM, and what do you see? There had to be a moment.
Yes. Yeah. I can walk you through that. So I met a friend of a friend who worked at a medical malpractice insurer, and they were a data analyst there. And as a nerd, I was like, "That's cool. What kind of data do you analyze?" And I learned that they were analyzing this medical malpractice insurance claims data to provide averages. So a hospital would say, we had 20 cases where a doctor sewed someone up and left a sponge inside them. Is that a lot? And they would say, no, the national average is 50, so you're doing great. right? Or the national average is 2, so you have a lot of work to do. And hearing about how that data was used was incredibly eye-opening to me, because I was like, man, there's hundreds of thousands of medical malpractice claims. You could learn something really valuable about these claims that are far and away, more significant than just whether or not you're slightly better than the national average, right? So I started to look independently at if I could predict what a claim would cost, like set a perfect reserve, predict a perfect indemnity payment using what's called the NPDB,
Cool.
the National Practitioners Database. And it's just for medical malpractice claims. But the long and short of it was that using some pretty basic machine learning, I was able to predict indemnity payments with about 75% accuracy into 5 different pricing buckets. Again, as more of an independent kind of engineering project than anyone who knew anything about insurance. But then I started reaching out to some insurance companies and basically said, hey, is this any good? Is this useful? Some very large insurers took interest, brought me into some meetings and kind of validated, oh, there's something really valuable here. And that was what kind of kicked off the whole, that's what really got the ball rolling. So I applied to Y Combinator, that accelerator program that your son Alex went through, got some funding and started building out this product. And we were originally just predicting indemnity payments, right? Setting perfect reserves, predicting what a claim would cost, and very quickly learned that it was a cart before the horse issue.
Sure.
So as we worked with more and more captives and risk retention groups, which is where we started, because in medical malpractice, about half the space is handled through the risk retention group market. It was just very eye-opening that there were so many small insurers and even medium-sized and even large-sized insurers that didn't have that data. We were trying to apply machine learning, and even people with systems, people that had database-backed claims management, the system was 35 years old, so it was never built with machine learning in mind. And folks without systems were just using PDFs, maybe Excel spreadsheets at best. So it was, I think, cart before the horse is the best way to describe it. We realized, there's this hair on fire problem that needs to be solved before you can start looking at really cool stuff like machine learning and artificial intelligence. And, when you see something like that, you kind of can't help but solve it.
And just so our insurance side understands, this is, you're not talking about a theory anymore. I mean, you have customers, you have a product, it works, and people are using it every day, correct?
Yes.
Congratulations. That's great.
Thanks. Yeah.
Yeah, that's a very good thing.
Living the dream as a startup founder.
In your garage?
Not quite a garage.
Okay. All right.
Well, I think it's interesting how you pivoted, right? You saw a need that you thought would work, and then you realized, wait, the industry needs something else, and very quickly you pivoted your market or your strategy, and that's very difficult, right? Was there any difficultness to that?
Yeah, it's definitely painful. More around, there's often a disparity between what people want and what they need, right? Like when you're selling artificial intelligence and machine learning, especially in 2019, that's very sexy, right? Everyone wants AI on their stuff. And what's less exciting is to tell people, hey, what you really need is workflow software to,
Yes.
track data points. And I think one of the hard truths is that, everyone, it would be nice to just be able to pay money, plug in cool machine learning and get all these benefits. But you kind of, you get out what you put in, right? You need to do basic data tracking, architecture, workflow work before you can get all the cool machine learning benefits. And you see this in other industries, right? Like the reason that Google is able to dominate everywhere they go is because they have this whole architecture that they've built where they track incredibly high fidelity data.
Right.
And a similar sort of thing happened in the credit space, right?
Right.
Modeling risk and deciding who to give a loan to used to be a very personalized, sit down with a banker and chat with them before they decide to give you a loan. And now it's kind of all been automated. But that process wasn't easy. There was a prerequisite there of getting this data. So the pain was less about the switch. We kind of equate it to selling solar roofs, and then you go to put someone's solar roof on and their house is on fire. And all the houses on the street are on fire. And so it's not that it's painful to go put out these fires. It just can be hard to educate people on, this isn't a quick, easy fix where you just get to pay money and plug in AI and now you get AI, because I think anyone that sells you that is going to disappoint you.
Right.
It's really about building your organization such that you're a data-oriented and quantitative-focused organization, and that unlocks your whole, system to all the potentials of what you can do with well-structured data.
So is that the problem you're solving? You're solving a data problem that people's data isn't organized and you're unable to get to it a lot of times. So your solution allows it to be organized and accessible?
Yeah, I really, for a lot of companies, it allows it to be present.
Okay.
There are a lot of, a good example of this is if you think about someone like Guidewire, Ventive, your big claims management database-backed companies. Guidewire has 350 customers, Ventive has 600. I think all those companies together cover about 1,500 companies, right? And there's 32,000 insurers globally. So there's a massive, there's thousands of insurers, and there's something like 16,000 TPAs in the US alone, right? Thousands of TPAs that don't have a database-backed claims management system. So when they get information, it's as a PDF from a lawyer that gets saved to a folder. And so everything that they learn about a claim is in their head. And that information is not being quantified or stored anywhere, right?
Yeah.
And that's where you get this kind of paradigm of the longer someone's been a TPA, or the longer they've been a claims manager, or the longer they've been an insurance company, the more experience they have in predicting where claims are going to go or seeing where they're going to go. And there's kind of an inherent ceiling on that model because there's only so many years that anyone could be a claims manager. And it really can't compete when you look at, if you start to quantify those things that inherently in your head, right? That sort of you guys know better than anybody, right? You read a claim and you're like, oh,
Sure.
I've seen
Sure.
some things about this before and I know where this is going to go.
Yeah.
It's about taking that and putting it down as actual data points so that you can see the bigger picture and learn at scale from hundreds of thousands of claims.
So what type of claim is it you're after? Is it all claims, or is it property, auto, health insurance? What is your target market?
Everything inside property and casualty right now. Definitely not touching health insurance. It's a pretty crazy space over on the health insurance side.
Yeah.
Incredibly complex, and would really have to be a whole different product. Within property and casualty, actually, we're completely data agnostic. So we have everything from medical malpractice, long-term care, auto, home. It's all fair game, because at the end of the day, we build our system is data agnostic to the TPA or to the insurance company. So you, as a company, decide what information is valuable to be tracked, and we are obviously have some global taxonomies for certain books of business, where there's already a data standard for you should track these things about a claim. But even within that context, we allow companies to say, we want to know these 10 pieces of information or these 100 pieces of information about every claim. And because of that, when you look at it through that lens, everything within property and casualty can really be pretty well handled as long as you're dynamic about the information that you're tracking.
So whenever you're tracking this information, you talked earlier about PDFs being hidden in folders. What do you do that's different? Is it capturing this data more on form-based applications where you can report on it? What are you doing that's different than other claim companies, claim management softwares?
It's a great question. I think it's a couple things. So one is about actually changing behavior, right? When you read a PDF, you learned a lot of things. Let's say it's a, PDF from an attorney, right? You learned who the attorney is, and maybe you learned something about the plaintiff and who their power of attorney is and what their age is. And so you take all these learnings, and part of it is about just doing literal data entry really seamlessly. So letting you as a claims manager or a TPA enter in those individual data points and change the behavior to start tracking those data points. And then the other is about search and accessibility of the rest of that data. So when you upload a PDF, classifying it into the right place and allowing you to do a deep elastic search that will go through the text of email files that you upload and the text of PDFs that you upload to find the information that you're looking for. At the end of the day, our goal is about giving everybody involved in the claim accessibility to a single source of truth so that everyone who learns anything can put information in one place as a specific data point, and everyone has access to that. And that goes all the way down to first notice of loss, right? Instead of someone filling out, or calling or emailing, their broker or whoever they think their insurance company is to tell them a story, and then have that person tell the underwriting company to get the policy, and then the underwriting company, right? Like, instead of that whole game of telephone, fill out a first notice of loss form, ask them questions, that becomes an incident report that now everyone gets notified about and can see and add information to and kind of grow naturally.
So out of all of this data and the artificial intelligence, what do you hope to gain, or what do you think that you're going to be able to produce in the future, making all this data accessible?
Yeah, good question, I think. So there are two things on our roadmap. And again, I'll reiterate that doing these predictions, this artificial intelligence, is at least a year out, maybe 2 years out.
Okay.
For us, in terms of books of business, because to do those things well, you need to spend at least a year getting good quality data.
Right.
But yeah, so in that future state, there are two things. One is setting reserves, predicting what a claim will cost. You see this in the med mal space all the time, where a claim there takes a long time. It might take, let's say, 7 years. Five years is average, I believe. And at the end of 7 years, what often happens is they'll pay out an indemnity payment of $100,000, and they'll pay $350K to lawyers. And so if you're an insurance company, you're kicking yourself because you're like, man, if I knew I was going to pay that guy $100,000, I would have given him $200,000 6 years ago, right? I would have saved a bunch of money. The person who was actually harmed would have gotten more money for their claim. The doctor wouldn't have had to spend all this time with a med mal case over their head. And that's an extreme case, but it really holds for everything in property and casualty. I actually just took a Lyft, and the driver was talking about how it took them 6 months to get, money from their auto claim. And it's really because of this same process, right? It's all very slow. So indemnity prediction is huge, right? If you can say with confidence, this is what your claim will cost, you can just settle the claim or pay out the claim for that amount, and you don't need to spend any additional costs figuring out the accuracy of that.
Right.
Because that's what so much of the insurance space is. If you already know what you're going to pay in the future, then you don't need to spend any money trying to figure out how much you should be paying.
Smart.
So that's one thing. And then I think this really spreads into every other part of the industry. If you look at, a lot of actuarial work is done to figure out what a claim is going to cost, at incredibly high prices. And if you look at things like underwriting and risk profiles, I talked about the credit space earlier. If you apply for a loan on so many of these online credit, lending club type companies, they have so much information and ask so many questions that they can just say, here's the risk, right? This is their interest rate. Give them a loan at this, or don't give them a loan at all.
Yeah.
And I think it is very realistic to say that insurance could go that same way, where you just say, here's the curve. This is exactly where they fall on it. Insure them or don't at this rate. And I think that just gives everybody in the process more power. There's always going to be an advantage to being a human, right? Like, you're never going to remove the human element from this, but it's about being more efficient and being able to have all this knowledge at your fingertips so that you can make choices.
Right. I had a friend who, a couple years ago, fell and hurt her back, and her husband was very interested in, well, what's that worth? You know, what's the settlement going to be? And what you're basically saying is that that's all very predictive, or it can be with good data.
Yes. Yeah. I mean,
and it doesn't just have to be somebody's back. It could be a roof. It could be a car. It could be, and obviously cars are relatively easy, but any number of different things.
Yeah, absolutely. And we kind of already know this to be the case, right? Like by nature of being a human, even someone who's never looked at a claim before could read over, an accord form and read over a description and say, you know what? Like they're probably going to get paid out for that pretty well. So if you just think about that at scale and at really, really high fidelity of data, it's sort of an inevitability that we will be able to do this better.
Sure.
I'm thinking about data, and I'm thinking about a lot of things that surround data, and there's always the question of security. Can you talk to us a little bit about your company and the philosophy around keeping this data safe?
Yeah, we are huge on companies need to own their own information, which we think doesn't exist in a lot. I've talked to a lot of folks who say, oh, I can't change my claims management software because they have all my data. And, I'll lose it if I change my software. And to me, as an engineer, I'm like, that's crazy. Like that has to be illegal, right? Like it's your data. They can't keep it locked up, but they do. So on one thing from the data perspective, we allow all our customers at any point to export all of their data in a structured format and do with it what they will, because it doesn't belong to us, it belongs to them. And we, in our contract, obviously, can use that data to do machine learning. But the other big piece of that is security. So everyone's data is stored separately. No one's data is ever made accessible to anybody else. We are completely HIPAA compliant. We sign NDAs for all of our customer data, so that your data is your data and it's siloed. Even in the, for TPAs that might manage claims for a bunch of different companies, we allow you to basically transition between those companies to manage those claims. But even then, the data itself for that company is completely siloed so that there could never be the opportunity for any crossover to happen or any exposure to happen. We're incredibly hyper about data. We even have BAAs signed with Google, our cloud provider, and they meet something like 8 to 10 different annual security audits every year. So I consider us truly at the forefront of data security, data protection, and then also customer data access.
So can we talk a little more about being a startup?
Yeah.
That must be a very interesting experience. I think that most people in our audience who are outside of that community, everybody hears stories. I've watched Silicon Valley on HBO, so I know exactly what goes on in startups by watching that. But
I think you might think you're being facetious, but
but that's actually right.
So talk to us about being a startup in the insurance industry. It must be illuminating and interesting and challenging and everything else. But tell us about being a startup.
Yeah, so I was at IBM, which was a 400,000 person company. So you can imagine there's a pretty
400,000.
Yeah,
that's a lot of
That's
employees.
A lot of people.
Yeah, I might be running it. It might be 365 or something.
Oh, I thought so.
Yeah,
I'd have to double check that. But
a lot.
The point is a lot more than two. So when you found a company and you go from 365 to 1 or 365 to 2, you obviously get a lot more. So I think the advantage of being a startup is that you get a really large impact and you get a really focused vision. There are a lot of people at large companies that go to work and they do their 9 to 5 and they're not moving the needle. And when I say the needle, I don't necessarily mean the money needle. I mean like the needle for actual impact on what you're trying to do, right? And that's just really like cannot be matched at a startup. Like every single day, every minute of work that everyone here does actively impacts our customers. Like before I got on this call, I was on a call with a customer and just going over, they said, oh, like it would be great if these categories could be this. And, like I tried to upload this file like this. And you can really, really actively and quickly make massive change very quickly and
Yeah.
move really fast. I think that's something that's really eye-opening to a lot of our customers is like one of our big selling points is we onboard all of your data in 1 week.
Yeah.
And we don't charge for that, for like implementation or onboarding like so many of these large enterprise software companies do. And most folks don't believe us when we say that we're going to onboard all their data in a week, right? Because their last contract took a year and a half to onboard their data. And I think really you get those advantages when you're a small company. There's no waste, there's no slowdown around things like that. So you can deliver value to your customers really quickly, and you can get really specific feedback from your customers to give them what they actually want. I think as you get bigger, it's more and more like you get what you get, right? You're not like emailing IBM about their mainframe and saying, hey, it'd be great if this thing had wheels on it, right? Like you're not getting wheels. Like, and if they do say they're going to change something for you, it's going to cost you, an insane amount of money, and you're not going to get it for 2 years. But when you're working with a startup, which is something I love, right? You say, hey, we need this thing, and you can get the thing in a week, right? And yeah, I love that being a startup founder, because I think it's foolish for any company to think that they know more about a space than their customers, right? Like you're building a software to solve their problems. So the more that you can learn about their problems, the better your software is going to be for everybody. And the speed at which you can do that is just unmatched in a startup.
Yeah, and I think about, being in a startup, your voice as being on the startup side, your voice is so powerful. You speak and everyone listens. As whenever you're with a large company, sometimes your voice, falls into the woods where not everybody can hear it. But if you have an idea, it's accepted, or it's at least discussed, and you feel more powerful as a employee, as a founder. You can actually make a difference. I had a friend one time who told me that they went to work for a startup company, and they decided that they were either going to go work for a startup company or go get their MBA, that they wanted to learn more about business. And they went and worked for the startup company versus their MBA. And he said it was a great opportunity, that he got more knowledge on business practices by working for a startup company than he thought he would have with his MBA. What do you think about that?
I think that's absolutely the case, because when you come to work for a startup, when you sign up to work for a big company, you're going in to give them work to get a paycheck, right?
Yeah.
And when you join a startup, you're joining it because you care about their vision. You care about the problem that they're trying to solve, and you want to contribute to that solution, right? Because if you just wanted to get a paycheck, you would just go work for a big company. So I think by nature of that, everybody is way more involved, right? Like, of course your voice gets heard because you care about what the founder and the CEO and the CTO all care about, right? Which is making your customers' experience better. Like you wouldn't be there if you didn't care about the mission and the vision. And kind of by the same token, since everyone is on that same goal, right? Of like our goal is to make better claims management systems, like make our customers' lives easier and faster. There are so many things that go into achieving that goal. Some of them business, some of them financial, some of them software engineering related, that when you have a company and a group of people that are vision oriented and mission oriented, it becomes less about the task that they're doing and more about doing whatever it takes to achieve the goal. So in that way, you get so much more exposure to business and to finances than you ever would at a normal company, because it's you're a team. Everyone's
Yeah, right. You're not
going after
siloed.
this. Yeah, exactly. Like you weren't hired to do business. You were hired to help these customers have a better claims management experience. And that means you're kind of ready to pick up whatever torch needs to be carried.
We had an interview with Dan Burton, who is the CEO of Drone Base, if you're familiar.
I'm
And
not familiar
they're
with
they're a
drone
Y
base.
Combinator alumni. And we asked Dan. He also has a Harvard MBA, which is pretty not a bad pedigree.
Yeah.
And uh, and we said, wow, you're a Harvard MBA, blah blah blah. And he said, and I'm paraphrasing, so don't get mad, Dan. But he basically said that um, that his Y Combinator experience, or the startup experience, was actually kind of more valuable than his Harvard MBA experience, right? It meant more to
Yeah.
him, and it gave him more um, background and understanding and everything else. And I think that that's related directly to what you're talking about in a startup. I mean, what Y Combinator does is they just kind of put the whole thing on steroids for you, right?
Yeah, definitely. It's a really great forcing function for progress.
Mm-hmm.
Like one of the best things you learn from this accelerator is that, like I mentioned, all that matters is improving the experience for your customers. Like, did you move the needle on your goal as a company?
So
And
that's over and over and over again what they're pounding into your head.
yes, every single experience you do group office hours, right, where you all sit in a corner with these other companies, and everyone goes around and you say, "What'd you do the last 2 weeks?" Right, and within 2 weeks you have good weeks and you have bad weeks, right, and it's kind of this really strong forcing function of sometimes you'll sit down and say, "Hey, we didn't have a great week. We didn't get these problems fixed that we wanted to get fixed, and that's where we sit." And everyone else says, "Oh, well, we solved all our problems. Like everything's way better." And then you leave that meeting and you're like, "Oh God, like never again. Like we're going 2 weeks from now, we're gonna sit down, we're gonna blow it out of the water." And then you sit down 2 weeks and you say like, we solved this customer's problem. We solved
Yeah.
this customer's problem. We like got a new customer and like they're we're doing this for them. And everyone just looks at you like, "Wow, that's amazing." And I think when you get to a big company, you lose that drive, right? Of like, what are you
and
here for?
and the focus. And I mean, we work for we work for a small I mean, we're a small business in our little industry space, which is just a little industry space. We're maybe a medium or larger, but we're a small business in terms of America.
Mm-hmm.
And uh, you know, I think that you bring up a really important point, and they're teaching you about a important point, and I hear it in your whole presentation, and that is, how are we adding value for the customer? How are we making this experience better for the customer? Customer, 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 customer. And I wonder, out there in our audience, is that something that people hear? And is it something that you hear enough? And so I think if you stay close to your customer, chances are you will succeed. There's other factors, of course, but what's bigger?
Yeah.
Yeah, it's a great point. I think startups live and die by that, right? Because what makes your company succeed as a startup is not really money in the door. You get investment money. That what makes your company succeed is building a good product, and the way you build a good product is by listening to your customers
Love that.
and solving their problems. So startups, I encourage everybody obviously to hire and work with startups, because I think you just can't beat bang for your buck. You're going to get someone who's as passionate about solving your problems as you are at a price point that can't be beat, and they'll work faster and more efficiently than any other option.
And
Um,
I just want to accentuate one thing that we had an interview with Alyssa Hunt, who's from QB, very smart insurance executive, and she works in vendor management, or has in the past extensively, and one of the things that she said is she goes around her organization and she asks people, "What are your problems?" And it's a very, I mean, it almost sounds trite and simple, but what are your problems? And those are the things that she goes out and shops for as a vendor manager, as a procurement person. That's what she shops for, are the things or the products and services that solve people's problems inside of their organization.
Yeah, I think that's a fantastic approach to management, especially once you get to a big company. I think executives tend to be, not through any fault of their own, abstracted from where the real inefficiencies lie in their organization. So when I call someone who's a potential customer, the person I really want to talk to is the claims manager, like who's actually handling claims. Even if it's a big company, they'll sometimes say like, oh,
Right.
if you're trying to sell claims management software, you got to talk to our, CTO or our chief information officer. And, I'm like, yes, I do want to sell you claims management software, and that's great. But I kind of first want to see if we're a fit, right? Like I want to talk to the person who's actually managing claims and hear like, okay, what do you like about your current process, right? Like what are you really fast at, And often you'll find out, oh, it used to take them 2 minutes to do this. Now it takes them 20 seconds, and it should take them 2 seconds, right? And like they don't even know that it's the technology has existed to make that take 2 seconds. Or what do you really dislike? And they'll say, anybody who works anywhere has no hesitations in telling you what they don't like about their job, right? And
Right, sure.
they'll tell you, this takes me forever. I have to do this thing 3 times. And that's where the real value lies, because
Right.
then you can go to someone and say, hey, look, like, we're saving 100 hours per claim, right? Or, we're like really fixing the things that you care about. And that's the goal,
So, as we come to a close here, let me ask you to tell people how, if they want to reach Cameron MacArthur, how do they do that?
Good question. So our website is aiinsurance.io. You can always reach out to me on my email address, cameron@aiinsurance.io. And I will even give out my personal number. If you want to call my work number and talk to me about claims management, it's 802-255-8990. And on our website, we have a bunch of links where you can request a demo. And, if anyone wants to see the product or talk to me about claims management software, I'm all ears.
Well, we appreciate you so much being on. Even before the call, I had an opportunity to visit with Cameron about some of the details of the claims software itself, and just a lot of exciting things happening here. We appreciate you taking the time, and we look forward to visiting with you on future episodes.
Pleasure. Thanks.
Sounds great. Thank you guys so much for having me. This has been a blast. Really appreciate it.
Very interesting podcast today. Interesting interview with a interesting young man, don't you think?
Yes, I think it's interesting how he thought he was going to go down a path. All of a sudden, he had this moment where, I can predict information based on your data, and then he realized there was dirty data, and he thought, oh, I need to get the data clean, and he decided that's where he was going to start his company. I thought that was neat. Pivoting, right?
Right. One of the things that was interesting to me was I was thinking during the interview about the vastness of the InsureTech space today.
Yeah.
We found out about Cameron and set up an interview, but of all the different things and ideas and stuff that's going on in InsureTech, new ideas, new products, here's just another one that, I would have never imagined, but yet here it is, part of this vast InsureTech world that is literally thousands of different companies doing all kinds of different things.
Yeah, it is. And, claim management systems is not one that you ever really thought about. You thought, oh, well, it's a system, it's going to hold records and I'm going to be able to access the records and, it'll be great. But claims management in InsureTech using AI to actually read the data, that's a whole nother twist on
Right.
InsureTech. It's a whole nother way to really make your data work for you.
Right. His future state that he was talking about, super intriguing.
Yeah, yeah, being able to predict the cost of claims. Uh, I think that you would be able to use the data and really start working on the underwriting side based on what you
Yes.
did in the past, and uh, heck, you could start bringing in some additional data sources from outside, just like he was saying. Whenever you go to online to get a loan, they already know so much about you.
Mhm.
As soon as you start bringing all those additional data points into a software, you're going to have a lot of information to sort through.
Mhm. Mhm. Yeah, I don't think that the final chapter of AI insurance has been written. There's a lot of road and a lot of roadmap in front of them that I think is really intriguing.
Yeah, and I think that people, who have invested with them have said, "Okay, I understand you're making a foundation right now, but I'm really excited about the 35th floor, right? Or the 75th floor
Uh-huh.
you're going to be building."
Uh-huh.
And I see him, even in
Uh-huh.
talking to him, he's a driven person
Yes.
who's a hard worker,
Yes.
and I'm excited about what he's going to be able to do with this product.
Yes. And I know that that even a company like ours could use a product like his. Yes.
Yeah, I even, during that interview, I was thinking we have a need that would fit that would fit his company very, very nicely.
Mhm.
And I think a lot of companies do. There's not always one solution that works for everything, for all of your needs. So a lot of times you have to bring in different softwares, and this would be a great one to help you out with that.
Well, we're real appreciative to Cameron, and we wish him all the best. I'm sure that we'll speak to him again and see him when we're in Silicon Valley, and um, we'll see you all on our next episode. What do we say at the end of our episodes, Lee?
We ask them to comment and like our podcast.
Yeah. Good.
We also say goodbye.
Everybody.
Goodbye, everybody.